Every business, regardless of its size or security measures, harbors a hidden vulnerability: cash larceny. This isn't just about missing money, it's a breach of trust, a threat to your financial integrity, and a silent erosion of your hard-earned profits. This dramatic scenario will expose the insidious methods of cash larceny, equipping employees, managers, auditors, retailers, and accountants with the critical awareness needed for prevention and compliance. The camera pans across a bustling retail store. Customers line up, cashiers ring sales, and the store manager, Alex, observes from above. The scene appears normal, but beneath the surface, a silent threat lurks. Every dollar handled, every transaction processed, presents an opportunity for theft. Cash larceny, the theft of cash after it has been recorded, is a sophisticated crime that can devastate a business. This is the story of how one store nearly lost everything to a shadow in the cash office, and how vigilance became its ultimate defense. The point of sale is often the first line of defense, but also a prime target. Understanding these methods is crucial for all employees and managers. We meet Jamie, a trusted cashier. During a quiet moment, Jamie slips a $20 bill from the register into their pocket, confident no one is watching. This direct theft is a blatant violation of trust and a clear compliance failure. It highlights the immediate need for robust oversight. Later, Jamie processes a legitimate sale but manipulates the register by entering a lower amount, pocketing the difference. Sometimes, Jamie simply fails to ring up a sale, creating a discrepancy between cash on hand and the register tape. This manipulation undermines accurate record-keeping and financial reporting. To cover the missing cash, Jamie processes a fake refund for a returned item or voids a transaction after the customer leaves. This reduces the register's recorded cash balance, making the drawer appear to match the now short amount. Such actions demand strict authorization protocols and manager supervision. At the end of the shift, Jamie discreetly destroys or alters the register log, erasing evidence of the theft and manipulation. The paper trail is gone, making it harder for auditors to spot discrepancies. This act is a serious breach of compliance and an attempt to obstruct justice. Cash larceny isn't confined to the front lines. It can escalate to more sophisticated schemes in the back office, impacting financial statements directly. Meanwhile, in the back office, another employee, Taylor, is responsible for preparing daily bank deposits. Taylor pockets a portion of the cash before making the deposit, recording only part of the day's receipts. This is cash larceny from deposits in transit, a critical vulnerability for accountants and auditors. To cover the missing funds, Taylor uses the next day's cash receipts to make up for the previous day's short deposit, a classic deposit lapping scheme. This creates a rolling shortage that can persist for weeks or months if not detected. It's a deceptive practice that requires meticulous financial review. Taylor sometimes delays deposits, claiming the funds are in transit to the bank. This buys time to cover up the theft, but also creates discrepancies between the cash recorded and the cash actually deposited. Such delays are red flags for auditors and demand immediate investigation. When controls fail, robust detection methods become paramount. This is where auditors, accountants, and vigilant managers play a critical role. The store's accountant, Priya, notices that some receipt numbers are missing and that not all sales have corresponding cash deposits. She reviews sequential receipt numbers and finds gaps, an early red flag for potential larceny. This meticulous review is a cornerstone of auditing. Priya checks whether the store's control objectives are being met. Are all cash receipts being deposited? Are refunds and voids properly authorized? She finds that some refunds lack supervisor approval and some deposits are consistently short. This highlights the importance of internal control adherence. Using analytical review, Priya compares sales data, cash deposits, and refund activity over several months. She spots a pattern: Jamie's shifts have higher voids and refunds, and Taylor's deposits are often delayed or short. This powerful technique helps identify anomalies and potential fraud. A surprise cash count at Jamie's register reveals a shortage. The manager reviews the register's audit trail and finds that Jamie has processed more voids and refunds than any other cashier. Surprise checks are invaluable tools for managers to ensure compliance and deter theft. PREA performs a cash account analysis, reconciling the cash on hand, cash receipts, and bank deposits. The discrepancies point directly to Jamie and Taylor's activities. This fundamental accounting practice is essential for identifying and quantifying cash larceny. The ultimate defense against cash larceny lies in proactive prevention and a strong control environment. These measures protect assets and foster a culture of integrity. The store implements separation of duties. No single employee can handle cash, record transactions, and reconcile accounts. Cashiers, deposit preparers, and reconcilers are now different people. This fundamental control reduces the opportunity for a single individual to commit and conceal fraud. Jamie and Taylor are required to take mandatory vacations and rotate assignments. During their absence, no further discrepancies occur, confirming the source of the fraud. These practices are powerful deterrence and detection mechanisms, especially for long-term schemes. The manager begins conducting surprise cash counts and directly supervises refunds and voids. This deters future attempts at larceny and reinforces accountability. Active managerial oversight is critical for maintaining control effectiveness. The store upgrades its physical security, cash drawers are locked, access to the safe is restricted, and surveillance cameras monitor all cash handling points. Robust physical security measures are a tangible barrier against theft and provide crucial evidence. The narrator concludes, through vigilance, strong controls, and a culture of accountability, the store defeated the shadow of cash larceny. Every dollar is now accounted for, and trust is restored. This isn't just a story, it's a vital lesson in financial integrity. Your business is not immune to the silent threat of cash larceny. This training has illuminated the methods, detection techniques, and, most importantly, the preventative measures. Now, it's your turn to act. Review your internal controls, educate your teams, and implement robust oversight. Don't wait for a crisis. Proactively safeguard your assets and uphold the trust placed in every employee. Take action today to protect your business from the silent thief.